Yes, good morning, my dear students. Welcome back to our accounts class. We were studying final account with the adjustments. All of you, please take your textbook, page number 20.42. 20.42. In that page, this one. I will read it, then I will explain. If the items of outstanding expenses, unearned income are given inside the trial balance, this will be shown only on liability side of the balance sheet. Similarly, if the items of prepaid expenses, accrued income and closing stock are given inside the trial balance, this will be shown only on the asset side of the balance sheet. Normally, these items we are seeing in the adjustment. If the items are given in the adjustment, it needed two treatment. It will come two places. But if the item is given inside the trial balance, only one treatment only required. And this outstanding expenses, unearned income, if this is given inside the trial balance, it shows that one adjusting entry is already over. Adjusting entry is already over, then only they have prepared a trial balance. That is why one treatment is already over. If outstanding expense is given, outstanding expense is already added to the respective expenses. And unincome is given, unincome also already added to the respective income when the journal entry is passed. That is why in the profit loss account, that adding process is not required. Outstanding expense we are adding, unearned income also we are adding. So both we are adding. Sorry, this unearned income means this we are subtracting. Okay, unearned income we are subtracting. Outstanding expense we are adding. It's both the treatment. That treatment is over when we return the journal entries. That is why no need of taking this in the profit loss account. And this both are personal account also. Outstanding expense is a personal account, representative personal accounts. Unearned income, it is a representative personal accounts. Then, and it is a liability for us. That is, and this we can see in the credit side of the trial balance. In the trial balance, this will be shown in the credit side. So those items we can take on the liability side of the balance sheet. And other three items also given here. Prepaid expenses, accrued income, closing stock. If this is given inside the trial balance, then this also already adjusted with the adjusting entry. Means prepaid expense is already subtracted while writing the journal entry. Accrued income, that is already added. Closing stock already subtracted from purchases. So that treatment is already over. So no need of taking trading or profit loss account. Only balance sheet only we have to consider. And these items, prepaid expenses is a personal account, accrued income also a personal account, closing stock is a real account. These three items will be given in the debit side of the trial balance. So that item you take on the asset side of the balance sheet. That only one treatment only required. Okay, one treatment means this is given, it is coming only in the balance sheet. Okay, now we can go to one question. Please take a page number 20.91. It is starting from this page. Question number 14. Question number 14 I will explain in detail, and this will be homework. Capital account is given 2 lakh. Then next items, debtors and creditors. Loan on mortgage 30,000. Interest on loan 2,250. Discounts, the discount is given on the credit column, that is why it will be income. Then stock on 1st April, it is opening stock. Motor vehicle, cash at the bank, investment is an asset. Wages, direct expenses, land and building, bad debts, purchases and sales return. This will be purchase return, and this is a sales return. Carriage outwards, indirect expenses. Carriage inward, direct expenses. Salaries, salary is this one 7200, and the carry outward this one, carry inward this one. Salary 7200 will be coming. It is indirect expenses, so profit loss accounts, outstanding salary. Okay, just now only we discussed about this one. Outstanding salary is given in the credit column, so it is going to liability side only. Okay, no need of adding this to the, already some salary is given to that, and there is no need of adding. So it is already added. When it is appearing in the trial balance, already it is added. Rates, taxes and insurance. This will be indirect expenses, advertising indirect, general expense indirect, bills receivable and bills payable. This is the bills receivable on asset side, this will be on liability side. Then prepaid insurance. Prepaid insurance, only one treatment only required. This is coming only in the asset side of the balance sheet. Okay, now we can see the remaining adjustments. Depreciate land and building 2.5% and motor vehicle at 20%, that I am not explaining. Interest on loan at the rate of 15% per annum is unpaid for 6 months. Here one loan is there. This one, loan on mortgage, it is given 30,000. So 30,000, now it is saying that 15%, 30,000 15% is coming. How much it will come? 30,000 into 15%, 4,500. This is for 1 year, and then 6 months it is outstanding, they are telling. So 2,250 will be outstanding, and for this amount 2 treatment will be required. It is an outstanding interest. Okay, so outstanding expenses will be added. So this 250 will be added to this 250, 2,250. Then totally 4,500 will come in the profit loss account debit side, and this is to 2,250 will come in the liability side of the balance sheet. Gyansham Das, this is the owner of the business, proprietor of the business, withdrew 2,000 for his private use. This amount was included in general expenses. So here general expenses, that is given, this one, 6,400. So from 6,400, this amount is not correct because of this adjustment. This 2,000 is already included in this one. So to get this correct amount, we have to subtract this 2,000. Then we will get 4,400. 4,400 we can take in the profit loss account, and 2,000 will be subtracted from capital because it is a drawing. Interest on investment is receivable for full year at 10%. Here one investment is there. This investment amount is 18,000. So 18,000 10%, that will come 1,800. That 1,800 will come on the 1,800. Then it will come on the credit side of the profit loss accounts, and again this 1,800 will come in the asset side, that we can add to this investment. Okay, to this investment we are adding that much percentage. Here next adjustment, provide for managers commission at 10% on net profits after charging such a commission. This yesterday this we studied. This we have to calculate last only. Provide for managers commission 10% on net profit after charging such a commission. So after preparing and after taking all the adjustment, take a credit side total and take a debit side total, find out the difference. That difference will be this much. Okay, it is coming 1,46,300 is coming. Now this into it is telling that after charging such a commission, so 10 by 110 is coming. Okay, this will be the commission amount. So it is very clearly it is written. Okay, this is coming in the credit side, and this much is there in the debit side. Now the difference will be this one. This is the profit before commission, and we have to calculate after charging such a commission. That is why 110 we are taking here. It is mentioned. Okay, and one more adjustment is there. So after this adjustment only we need to take this fifth one. Last adjustment, stock in hand on 31st March 2018 was valued at 25,000. Realizable value 22,000. So in closing stock, two values are given. We have to take the lowest price. So here 22,000 is the lowest price. This we are taking in trading account credit side, and the same amount we are taking on the asset side, as the writing will be closing stock. Okay. So this questions everything is over. And if you are not getting the answer, you have to listen my explanation of this one and check it, then definitely the answer will come. Okay. Now another question. Now see, next question is this 15th one. 15th one, no need. I am reducing some questions for you. Okay. So what are the questions I taught? That only you prepare for the examinations. And don't expect the same type of questions. I will make my own question. In that, what are the adjustment I taught? That only will be coming in the examinations. Now question number 16. This will be the last question. Question number 16, listen. Drawings, that is 35,000. Building 60,000. Debtors 30. Purchases 2,35,000. Capital, then creditor, sales, discount. Discount is given in the credit column, so this will be income. Now next page. Sales return, fire insurance, life insurance. So this fire insurance is okay, it is indirect expenses. Life insurance, actually business life we cannot insure. Okay, we cannot insure the life of the business. So this will be the life of the businessman. So, and it will be the personal expense of the businessman. And this you take as a drawing. What is the treatment of drawing? Like that you adjust this amount, life insurance. Drawing. Now, cash in hand, cash at the bank, stock. This is a closing stock. 1 second. It is a stock 31/3/2018. So we are not sure that whether it is a opening stock or closing stock. So how we can find out it is opening or closing? We can see what is the heading of the trial balance. In the heading of the trial balance, the date will be mentioned. See this one. It is given 31st March 2018. It means 31/3 now. 31/3/2018. And here the same date is given. Stock 31/3/2018. So this will be closing stock. Then if a closing stock is given inside the trial balance, how do we deal? We can deal only in asset side of the balance sheet. No need of taking this in the trading account. Now bad debts, carriage, wages. Carriage will be direct expense, wages also direct expense. Plant is an asset, furniture also asset, salary. This is indirect expense, bank charges also indirect, coal and gas direct expense, rates and taxes indirect, bills receivable, it is an asset side, trade charges will be indirect expenses. Then in the credit side, miscellaneous receipt will be income. Bad debts provision, it is a 10,000. Bills payable 28,600. Now we can see the adjustment. Carry forward the following unexpired amount. Fire insurance rupees 700. So this will be expenses, unexpired expense we are carry forward means it is prepaid. Okay, already some expense is paid, in that 700 we can carry forward, means to the next year we can take this amount. That is why it is like a prepaid expenses. 700 is a prepaid expenses. Rates and taxes also prepaid expenses. So prepaid expenses treatment I taught you. Okay, like that what I taught, accordingly take that amount. Now next item, depreciate. Building 5%, furniture 10%. Now wages include 2,000 spent on installation of new plant on 1/4/2017. Wages included 2,000 spent on the installation of a new plant on 1/4/2017. So here wages is given. No? In this question wages is given. This is the amount. They are telling that in this amount, wages for fitting that one plant, installation charges of one plant, that is included in this wages amount. This amount is not correct. And we studied earlier that if any expense we are giving for any non-current asset at the time of purchases, it will be capital expenditure and it will be added to that asset only. So here they have taken it as a wages. That is wrong. Wages account debited is wrong. So this we can treat this way. This much amount. How much amount it is? This is 2000 we can deduct from this wages. Wages amount is this one. From this you deducted 2000. Then here plant is there, and plant amount where it is given to that. Plant amount is given under that 2 lakh 30. So to that 2000 we are adding in balance sheet. Okay. So 2000 we are subtracting from wages in trading accounts, and 2000 we are adding to plant. That will be that addition we are showing in the asset side of the balance sheet. That is okay. Then depreciation for plant is not there. If that is also there, then for that 2000 also we need to charge depreciation. But here depreciation for furniture and building only given. Next, make a provision of 5% on sundry debtors for doubtful debt. So that we are knowing debtors is given here. Debtors in the previous page it is given. Okay, that debtor into 5%. That will be the new provision amount. And this is known as a new provision. Old provision is given in the trial balance, and bad debt also given in the trial balance, and further bad debt is not given. So that rule will be, what is the formula we are using? Bad debt plus new provision minus old provision. So here debtor amount is 30,000. I will tell the amount. 30,000 so 5% will be 1500. So new provision will be 1500. Then where is the bad debt? Bad debt is 12,000. Old provision 10,000. So this is more now. Bad debt 12,000 plus this 1500. Mine and this amount is less than that total. That is why its treatment will come on the debit side of profit loss account only. Equation will be bad debt plus new provision minus this old provision. The amount will be 12, 13, 13 minus 3500 will be 3500 will be the amount we are taking in the profit and loss account. And in balance sheet, deduct 1500 from debtors. Trade expenses 400. Wages 1500 have not yet been paid. It means outstanding expenses. Then last adjustment is given. Manager is entitled to a commission of 10% on net profits after charging such a commission. After charging is given 10%, that is why they are taking 10 upon 110 they are taking. If it is simply, it is telling that before charging, then 10 upon 100 is enough. Okay. So this question also you prepare and you check that whether you are getting the answer or not. Okay. So this chapter is over. It is a very important chapter for the higher studies. Understanding of this chapter is very important. Okay, the purpose of studying the account is preparation of this one. Okay then, thank you.